Should you pay your board a lot of money? Not a lot of money? What is excessive? And is the Tesla board overpaid? Those are the questions we'd like to talk about today. But before that, as usual, the update. This is the Not Even Wrong podcast. My name is Krim. It's June 16, 2020. Since the last update, June 12th, we are up 9%. The S&P is up 3%. For the year, we are up 66%. The S&P is down 3%. We are outperforming by 69% for the year. Main contributors since our last update: Tesla got us about 4.5%, Microsoft 2%, the CRISPR basket about 2%. Let's get right into the news. First, on the macro front, I think we had some wild swings on Sunday night, June 14th to June 15th, and the recovery of the market quite strongly on Monday, and then today, Tuesday. And the reason is that the Fed basically announced further purchases of corporate bonds. What the Fed is doing, which is in line with our previous podcasts, the Fed is taking volatility out of the interest rate market. What started with the Treasury is now continuing with corporate bonds, high-rated corporate bonds. And in a nutshell, what the Fed is doing, it's pushing investors into riskier assets. They want people to not just buy treasuries and park their money in safe assets. They want velocity of money to increase, and that happens if people start taking more riskier investments. As a consequence, we expect the value of growth stocks to go up, and we are exposed to that trade. Now, let's get to first some news and then to the question that we want to discuss in this episode. There is one piece of news with Tesla that is concerning us a little bit. There are some quality issues with the Model Y. We believe that that is a concern. This is not just something we can brush away. The Model Y is ramping up. We had the COVID-19 closure for about a month and the reopening. So there are some issues. And the Model Y is being affected more than the Model S, X, and 3. Elon Musk actually wrote about this last week, and this today we also had some news articles going around saying that there are owners that are increasingly a bit frustrated with the Model Y quality. Fortunately, this is not like technology-driven quality issues. It's more things like a scratch on the seat, a paint chip here, and a seat belt that is not very tight there. So it's not that scary. We're not talking about fundamental problems with software and hardware and technology. However, we are still monitoring the situation. This is very, very serious. The Model Y is a key component of the Tesla growth story. A delay of Model Y would definitely cost stock 10-20% in value, and we urge the management to either fix this or delay the ramp. We'd rather have a little bit of a correction in the stock and then a proper ramp with good quality cars, because the quality and the demand for this company, the demand for its products, are key to the growth story. So we don't want this to be jeopardized. And then there's the other news, which also hit yesterday, and that's really interesting. And let me give you some background. So the proxy advisory firm ISS advised against renewing the Tesla chair, Robin Denholm. They're saying that she has not done a good job in monitoring the board's compensation, that the Tesla board is being overly compensated, that the numbers are exaggerated, and that's not good. And they are advising basically investors to vote for a new chair and not renew her as a chair, because they want more control over this excessive pay. Now, let me give you some background. First of all, what is a proxy advisory firm? What is ISS? Think of them like a very specialized consultant. They help institutional investors like pension funds, hedge funds, large investment companies. They help them think about certain issues. And one of the biggest issues these days is ESG, environmental, social, and governance. So as an investor, you want to have a good environmental footprint in your investments. You want to have a social footprint, particularly in this day and age. and you want to have good governance. So, of course, you should do your own work and your own research. ISS gives you another layer of advice. They do their own research, and then you can kind of match that. And if you disagree with them, then you can do some more work. This is kind of their purpose, and we have a lot of respect for ISS. This is definitely a useful institution in the financial markets. Now let's talk about ESG, which is part of what we also as investors, it's not our theme, but we are definitely very concerned about ESG. So we want the companies that we invest in to have a decent environmental footprint, a social and a governance footprint. Now, environmental, I think Tesla is by nature of its product, its mission, its existence already very, very highly rated. They just issued their impact report about 2 weeks ago where they specifically talk about the environmental footprint. And it's not just about being electric and reducing fossil fuels. It's about generating electricity in a sustainable way. It's very much along the lines that we also outlined in our investment thesis, that Tesla is trying to become a regenerative growth company, a company that is using less, at least as much, if not less resources than it's producing. So it's trying to be a net contributor of resources to the planet. And that is, of course, a very, very good environmental thing. And I think on the environmental front, we don't need to be concerned. On the social front, I think Tesla is also trying to do a very good job. For example, just yesterday, there was news that Tesla struck a deal with Glencore to mine cobalt in a more socially sustainable way. In plain English, they want to reduce child labor, slave labor, things like that, which are happening in Africa where a lot of cobalt is being mined. So Tesla is making an effort to make sure that the social aspect of its business is taken care of. On the governance side, according to ISS, Tesla has some homework to do. Robin Denholm has been a chair since Elon Musk was removed as chair. And she, according to ISS, is not doing a good job in board member compensation. Now, before I give our opinion about this, I want to just give a little bit more background on the question about what is actually the purpose of a board and how are boards organized in the US versus the rest of the world. That's a very interesting aspect, which helps you understand also a little bit where this whole controversy is coming from. First of all, Tesla has had, like many US companies, CEO and chair were the same. It was Elon Musk. Typically in the US, the board and the management are very much in line, often the same people, because the US philosophy is that there is no such thing as supervisory of management. You either believe in the management or not, and if you don't like it, don't buy the stock or short the stock or attack them as an activist. But the kind of within the company type of governance is not a very American way. It's much more prevalent in the UK and the rest of Europe, for example. For example, in the UK, the chairman is really like the philosophical, moral, ethical guide of the company. He makes sure, or she makes sure, that the ethical aspects, the mission is being taken care of. And the CEO is much more the executor, the guy who actually runs the business, or the woman. So the split there is much more prevalent. And in Germany, it's even more extreme. The supervisory board really is running the company on the strategic aspects, on the big picture question aspects. And again, the CEO is more of an executor there. So we have this split, and Tesla, like I said, was run by Elon Musk, is still run by Elon Musk, but also he was the chairman of the board. And then after he had some issues with the tweets that he sent a few years ago about the funding secured and things like that, there was a lot of pressure on the company. So they split the position of chair and CEO, and Robin Denholm became chair. Now, in our point of view, from our point of view, she has done a very good job in terms of corporate governance. It's not just her, but it's also the new CFO, Mr. Kirkhorn, who have added a level of feeling safe about the company that is very valuable to us. The communication is very transparent, it's clear. We believe very, very strongly in clear transparency, because that also gives you control over what you're actually investing in. And we also strongly believe that if a company is transparent, there's a less hanky-panky in the company. It's just a very simple thing. It's like when you meet somebody and they're very clear about what they do and they tell you who they are, you trust that person more than another person that is very convoluted. It's the same with companies. So we believe that the corporate governance again, partly since Robin Denholm has taken over, but also since Mr. Kirkhorn has taken over, has improved a lot. And we don't know exactly if these two are related. We believe they are. And we would give actually Tesla as a whole, as an organization, very high marks in corporate governance. And we believe that Tesla is a high-risk company, but because of the transparency, we believe it's on a very good foundation. For example, there is an interesting paper that came out about a year ago in the Journal of Finance about board member compensation, and there's just an interesting aspect that the paper brings up. It says that in very high growth companies with high potential, with a high discrepancy between assets and market value, so typically like high growth companies where the assets where the market value is a very high multiple of the actual assets because there's a lot of potential. In such companies, board members tend to be highly compensated because the complexity of the business is high, and therefore also the supervisory work is very deep, and the board members have a lot on their shoulders. And Tesla certainly falls into that bucket. Having said that, we still believe that the board member compensation at Tesla is a little bit excessive. Robin Denholm, according to the proxy statement for this year's shareholder meeting, has been compensated about $2.7 million in the last year. Larry Ellison over $5 million, and there is one more board member. She got paid even something in the realm of $7 million. Now, the bulk of that is stock options, and that's also a function of the high stock price. So the actual cash compensation is not very high. Nevertheless, we believe that these numbers are a little bit excessive, and we would like to see Tesla just rein in that a little bit. I think as compared to other companies, S&P 500 companies, for example, the average S&P 500 company pays their board member per head about $250,000 to $300,000 per year. Tesla's cash compensation for the board members is only about $10,000 to $20,000, so it's nothing. But the stock option compensation is very high. Lastly, we absolutely strongly believe that everybody at Tesla should be compensated not just at market but above market, particularly the top management, Drew Ballino, Jerome, Elon, Mr. Kirkhorn, and everybody else at Tesla should be paid. Andrej Karpathy, for example, head of AI. These people are doing unbelievable work, and the whole company is doing such important work. We want everybody to be compensated. The board members should be compensated very well. Investors should be compensated. Everybody who has a stake in this company should be compensated. But it still has to be within the realm of some sort of something that we can all digest.